Hey friend, welcome back. I'm very excited to make this video because you will learn how to trade like a professional. That's right. By learning chart patterns, you will learn how to buy low and sell high. Okay? So we have to first think about the market itself. What exactly is the market? The market is no different than Walmart. Walmart buy things low, things cheap in China, and they sell high. They buy at wholesale price, and then they buy to consumers for a 200, 300% markup. They buy low, sell high. The stock market is no different. The crypto market is no different. So when you do technical analysis, the art of looking at the chart and drawing meme lines, I will show you how you draw these lines so you can know the area where you should be buying low and selling high. Okay, so I'm looking at Ethereum chart, right? And when it comes to crypto, it's about accumulation and distribution. What do I mean by that? You see, this area is where not much has happened, and whales have been accumulating. And then this area, what I would consider to be perhaps an area of distribution. What do we mean by that? Well, whales buy low, sell high. So they buy at this area, and then when it has pumped 375%, they sell, they take profit. Okay, so that's what basically what we're looking at. Buying low, selling high. Okay, so next up, I just want to touch upon candlesticks, because when you look at candlesticks, what really is it? A candlestick is a bunch of people panic buying or panic selling. So this candlestick right here, it has pumped 76%. So perhaps there was good news about something on Ethereum. People bought, and it pumped and it pumped and it pumped. And look at this candle right here that has dipped 19%. Again, people panic selling. So when you see these big candles, just think of a bunch of people screaming to buy, and this is a bunch of people screaming to sell. All right. Okay. So let's look at chart patterns. The chart pattern is where you draw the chart pattern, and it will help you determine where to buy and where to sell. So let me look at BNB. Everyone likes BNB. And I will draw the chart pattern. Okay, so what happens usually is you look at the 4-hour to draw your chart pattern. And whenever you're drawing a pattern, the candles, the line has to touch 2 times. All right, so here, I look at this chart, I see this pattern right here. Line touched once, twice, line touching once, twice, 3 times, and I'll explain the psychology behind this. It's not just enough you know how to draw a chart. You have to understand the psychology. So what is the psychology behind this? The psychology behind this is that people are willing to sell at a lower high price. See, they sell here, it touches the line, they sell, and they're willing to sell at this price. So they're willing to sell lower. And this is a support. So every time the price touches this area, it bounces back up. It touches this area, bounces back up, touches this area, bounces back up, and we'll see if it touches this area and bounces back up. Okay. So if you were to draw this chart pattern and you bought here, and then you sell here, you would make 24% on your money. I know it's extremely, you're asking, oh, you're looking at charts in hindsight. That's easy, and you are correct. What's difficult about trading is that it's not so much about drawing the charts, drawing the lines, the meme lines is easy. What's difficult is the emotional aspect of it. You're not quite 100% sure that the trade will play out. Okay, so let me draw another. Oh, before I move further, when it comes to chart pattern, there's just a few basic chart patterns that plays out over and over and over again. there is the I'm trying right here. Pardon me. Oop. Okay, so there is this chart pattern, the rectangle, the triangle, the wedges, the pendant. Okay, so there are a few patterns that play itself over and over and over and over again. So for this rectangle here, it goes up, the price goes like this, right? You buy low, you sell high, you buy low, you sell high. And then there's also this triangle right here. The price usually goes like this. You buy low, you sell high, you buy low, you sell high. And then there's the pendant where it goes like this. So for every chart, of course, it doesn't range like this forever, or else people will be making money. It usually goes like this, and then it breaks out, or it breaks down. For a triangle, usually when it reaches the point like this, the market squeezes and it makes a decision to break out or to break down. Same thing right here, break out or break down. So let's practice by looking at more charts, and we'll draw the patterns. Rectangle, pendant, triangle. It's just the basic same patterns over and over and over again. So I look at this chart, and what do I see? I see it was a triangle, a rectangle. So right here. Okay, so let's see right here. And about here. Okay, so when you look at this chart, when you're drawing support and resistance, it has to touch 2 times. It has to touch 2 times at least. It doesn't have to be perfect. Of course, price can overextend, but the basic principle, the mob psychology behind this, is that whenever price touches the resistance, it goes back down. When it touches support, it goes up, because people deem that it's cheap. So if you bought here, you bought at support, and you sell at resistance, you'd be up 15% on your money. And so this is support right here, right? So you look, pardon me. You could have bought here, you set your order here, and you sell up here for like 13% of your money. Okay, so you're asking, oh, okay, so you buy low and sell high, but what happens if you bought here, and then what if you bought here and it just drops down? Very, very good question. You always practice risk management. Risk management is where you determine where you're going to take profit and where is your stop losses. Once it hit your stop loss, it means you're out of a trade. And let me give you a very, very quick example. Okay, so let's pretend that we are going to buy at this area, because we have assumed that it might have bounced up. So we go long here. Okay, and we assume that it might touch here, like the previous action. Okay. Okay, so say you enter this trade at this area right here. You enter this trade here, and if it goes up, and you're trading with $1,000, then you would have made 14% of your $1,000. However, if it goes down like this, then it triggers your stop loss, and you would lose 4.7% of your $1,000. Why is this important? First off, because you don't want to just simply hold. What happens if it keeps dripping? It keeps dropping, and then you'll be bag holding. You'll be holding, and you'll be down 19%. Second off, why this is important, because you want to have a risk to reward of 3.0, meaning you make more money than you lose. You have a mathematical edge, and this is how you win money over a long run. Las Vegas was built on mathematical edge. The house has an edge over a player, and if you trade like this over and over and over again, you will make money in the long run. So what's the risk to reward? Risk to reward basically means that, show you here, you say risk towards 1 to 3. So risk is 1. So assuming you're willing to lose $100, let's say $1,000, but this is the amount of money you're willing to risk and lose. But if it hits your take profit area to 3, that means you win $3,000. And if you follow this risk to reward of 1 to 3 over long run, you will make money. That's why it's important to have a stop loss. So the idea is to draw chart patterns, and chart pattern happens over and over and over again because of mob psychology. Human emotion does not change. So I'm sure you can look up, there are charts they can look up online, but here is the crash course on the chart, on the patterns. All right, so it's a rectangle where price bounces and it either decides to go up or down, breaks up or down. So in a bull market, you would buy low on support and you sell at resistance. There's also the triangle where it goes like this. So you would buy low and it's still high. And there will also be another triangle like this. This is called ascending triangle because it's going up. So price will go like this usually. And then you would buy low and sell high. Yeah, so the idea is for you to practice drawing your chart patterns, and eventually you will develop an eye to draw the pattern. It's not an exact science, it's an art. All right. So if you have found this video useful, I have a special offer for you. You can join my Telegram group where I give you trading advice, a winning strategy, a winning portfolio strategy, small gem coins like on Binance Smart Chain to 10x your money, and finally where to sell for maximum profit, because I suspect that the bear market is just around the corner around summertime, June. So I'll give you like some levels on how to sell, where to sell to maximize your profit. Membership is only $30 a month, and if you would like to join, simply Telegram me, message me on Telegram. Yep, and I hope you found this video useful. I will make more training videos to come. Of course, my specialty is simplifying it, so you will learn so much things, so much more to become a profitable trader. Thanks for watching. Please like and subscribe, and I'll see you in the next video.